Dare I say it, the Lighter token LIT is manipulated. The market overall is going down, but LIT has good news and it's not reacting to those news at all. There has been a listing on a major centralized exchange, Upbit, and the price is doing nothing. People on Twitter are already pointing out how Lighter relative to Hyperliquid is rather cheap when we look at its market cap relative to generated earnings. So is this potentially an opportunity to take advantage of a market, the perpetual futures market, that continues to grow very quickly? Hi, my name is Gerhard. I've been in the crypto space for the last 8 years. I hit my first million 3 years ago, and it is mainly through active trading of altcoins. My track record is on the website, linked down below. In the last 2 years, I started to publish my trades in real time. We are currently at an all-time high. And I made, over this last 2 years, 182 trades with an annualized return of 47%. While the rest of the crypto space has lost, we continue to make money. The reason why I share this is because I publish all of my trades in real time publicly here as well. I do not know many people in the crypto space that are willing to be as transparent. But every closed trade is shown over here. The open trades are of course available to the premium members. Now the price chart of Lighter isn't necessarily pretty. We tend to trade in a range and we are rather at the upper end of that range. If we were to go back to the equilibrium price, Lighter would fall by 23%. The fundamental question is always, what will happen with demand versus supply? Because Hyperliquid, the strongest competitor, also have an inflating supply, as in supply is growing as with Lighter, but the price of the Hype token is performing very well. So just because the supply grows does not necessarily mean that the demand cannot grow faster. Now this is the circulating supply of Lighter over time. The launch was quite fair. Half of the tokens went to the community, the other half to insiders. But the circulating supply will grow by 50% over the next 12 months. Now a protocol like Hyperliquid would survive a token unlock like this. This is the TVL. This is how much Hyperliquid is growing. Over the course of the last year, this almost 2x'd in capital. But have a look at the total value locked of the Lighter protocol. That does not look as pretty. We don't see any outflows anymore, but we also don't see any growth. And the demand of those protocols are very tightly linked to the usage of the protocol, because one of the main use cases for a token like Hype or LIT is to use it for trading fee reductions. So those tokens get staked, and the more staked, the higher the fee reduction. Here's how the Lighter protocol works. There's also an Ethereum layer 1 contract. Let's have a look at that token. There are 4,810 holders, and here's the number of holders over time. So on the left side, it's 600 tokens, in the middle 6,000, on the right 60,000. So we got 10x with each of those charts. So that means to be counted for the chart on the left, a wallet has to hold at least roughly $1,000 worth of the token. In the middle it's 10,000, on the right it's 100,000. We can see that all wallet cohorts over time tend to grow, as in there's more retail investors and also more whale investors that buy Lighter. So that's fundamentally a good thing. We want to see a growing investor base, because if there's more and more people getting into an asset, then we can even just trade a meme coin and that will go up. So having more demand, more people, a bigger investor base over time is very good. Now to a degree, the Lighter price is correlated with its attention as well. Here's the number of social engagements over time. But really, short term, the price is very much impacted by short-term leverage. Especially tokens for perpetual futures tend to be levered even more. They get bought by the people that use the platform with leverage. So in the last 24 hours, we only had 7.5 million worth of trading volume on the spot market. But on the perpetual futures, we had 114 million worth of trading volume. Now that was on Toolbit. On Binance, we had 45. Compare this to the Lighter protocol itself. Binance has more trading volume of LIT than Lighter has for its own token. Most people that bet on the asset tend to be betting on rising prices. As said, users of the platform are bullish. So the funding rate is positive. The longs have to pay the shorts in order to get more exposure. Now there is some correlation between trading volume and the price. It's not that strong for Lighter, but it definitely exists as well. When there's a lot of trading volume, it might make sense to take some profit. When there's less trading volume, it might make sense to buy. Currently, we aren't super low, but we aren't very high on trading volume either. What is clearly going up though, and that's a potential warning sign, is the leverage in the token. So the amount of bets that are currently made on LIT. Open interest is a measure of how much short-term interest there is. When this is very high, there's a lot of leverage, and that leverage can potentially exit. What's interesting though is that even though the leverage has increased over the last months, the price did not necessarily benefit to the same degree. I think it's better to be rather cautious with Lighter. The chart doesn't look pretty. The tokenomics are ugly with a lot of inflation. The platform doesn't grow while the competitor is growing aggressively. And even though there is some demand via the spot market, this doesn't help the price sufficiently, even with an additional buildup of leverage. Now, as said, I'm sharing all of my trades in real time to the premium members of this channel. But I also set up something new. You can now get a taste of premium without paying anything, without leaving a credit card. It's just your email over here. Then you will get one premium trade that I've currently open and that I think has a very good chance of making money. And if you decide to follow that trade and you're making some money, you can then decide afterwards whether or not you want to pay for premium. There is a 7-day money back guarantee for the premium membership as well. But again, feel free to just start out with the free trade. The link is down below, pinned under this video. So yes, it might be true that Lighter protocol is cheaper than Hyperliquid just on the revenue to market cap comparison. But once we include the token inflation and once we include the growth of the project, I think Lighter is still not cheap enough. If it's your first time here, feel free to subscribe. I publish videos regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time. Cheers.